You know, every single time you tap a piece of plastic, buy something online, or pay a business electronically, you're interacting with a massive, invisible financial engine. Welcome to The Explainer. Today, we're taking a close look at Visa, but we are looking way past that little plastic card in your wallet. We're going to tear down this trillion-dollar tech engine to see what's actually driving one of the world's most powerful and honestly often misunderstood financial networks.
Okay, let's start with a number that really sets the stage for us. $11.6 billion. That is the approximate quarterly revenue Visa recently generated, just in one single quarter. I mean, it's a staggering amount of money, right? But in the financial world, absolute numbers really only tell half the story.
What actually makes that revenue figure jaw-dropping is their 14% year-over-year revenue growth. Think for a second about how incredibly difficult it is for a mature, highly established giant to grow at double digits. Visa isn't some scrappy tech startup trying to go from 100 million to 200 million. It's a global behemoth, yet it's still expanding its top line like a much younger growth stock.
To understand why, we have to look at the payment volume. Over $4 trillion handled by the Visa network in that exact same period. $4 trillion moving through the ecosystem. Now that's not Visa's revenue, but it is the literal lifeblood of global commerce flowing directly through their digital pipes.
But here's the real hook, and the main reason we're doing this explainer today. 34%. That is the rapid growth metric for a specific segment of Visa's business, a segment you probably don't even know exists. And it begs the central question we have to ask today. Is Visa simply benefiting from inflation and people spending more money? Or are they secretly building an entirely new infrastructure that's much, much bigger than a traditional card business?
Section 1. The $11.6 billion machine.
Consider this almost impossible scale for a moment. 72 billion. That's the approximate amount of individual transactions processed by Visa in a single quarter. It's an almost unfathomable scale to wrap your head around. We're not talking a million or even a billion here. It's 72 billion distinct interactions. Every coffee you buy, every flight you book, every digital payment creates a tiny economic opportunity. And Visa? Well, they sit right in the middle of tens of billions of these daily moments.
Section 2. How Visa actually works. To truly grasp Visa's scale, we need to completely reset how we think about their business model. We actually have to dismantle the biggest myth in everyday finance. When you buy a $1,000 television on your Visa card, you probably think Visa is lending you the money, right? Well, they aren't. Your bank or card issuer handles the lending relationship and takes on all the credit risk. Visa, on the other hand, is simply the technology network providing the payment infrastructure. They don't need to finance the purchase, they don't need to manufacture the TV, they just need to move the data.
So the anatomy of a swipe is basically a four-step process. First, the customer taps the card. Second, the bank checks the transaction to verify the funds are there. Third, that payment information travels instantaneously through the Visa network. And finally, the merchant receives confirmation. Visa sits right there at step 3, safely inside the infrastructure. When billions of these transactions happen, Visa gets to participate in the economics without owning the goods or loaning out a single dime.
Section 3. The power of scale. Because Visa operates purely as a technology network, they benefit massively from what's called operating leverage. The global infrastructure is already built, the physical servers are running, the software is deployed, the relationships with banks are secured all around the world, and that brilliantly illustrates why we see this distribution of growth. Payment volume is up 10%, processed transactions are up 10%, cross-border volume, which by the way is highly lucrative international spending, is up an impressive 12%, and as a result, earnings per share grew by 11%. This proves Visa isn't just relying on price increases to grow, the underlying global activity of electronic payments is expanding. Because the network is already globally deployed, processing more volume doesn't require them to rebuild the company. The profits just scale beautifully right along with the transactions.
Section 4. The hidden growth engine.
But the real surprise here is the stark contrast in growth rates. Remember that already impressive 14% overall revenue growth? Well, dwarfing that number is a 34% explosion in Visa's value-added services. This right here is the secret weapon buried deep in their earnings report.
So what exactly are value-added services? We're talking about data analytics, cutting-edge security, fraud prevention, consulting, risk management, and broader technology services. Visa is making a strategic pivot here. They don't just want to be the toll booth you pass through to buy your groceries anymore. They want to become a broader financial technology infrastructure company, selling critical, high-margin capabilities to the banks and merchants that are already plugged into their ecosystem.
Section 5.
risks, and the road ahead.
Look, the biggest structural tailwind driving Visa's future is the digital payment revolution. We are shifting from cash to cards to phones and now seamlessly into digital wallets. Every single generation is getting more and more comfortable with this. But here's the caution. Visa doesn't automatically win just because cash declines. The method of payment is changing rapidly, and Visa has to constantly evolve its underlying rails if they want to stay relevant in a digital wallet world.
Starting with the bull case, optimists point directly to Visa's massive global scale as a nearly insurmountable moat. They see the increasing digitalization of global commerce and expanding cross-border transactions as guaranteed long-term growth. Combine that with the rapidly expanding value-added services we just discussed and those powerful network economics, and you have a company that looks perfectly positioned to act as the central nervous system of global digital commerce for decades to come.
But we have to immediately counterbalance that with the bear case. Look at the very real threats here. Because of its sheer size, Visa faces aggressive regulatory scrutiny from governments worldwide. There is fierce, relentless competition from new digital wallets and incredibly nimble fintech startups. We're also seeing the rise of alternative account-to-account payment systems, where consumers might eventually bypass card networks entirely. And finally, because Visa is universally recognized as a fantastic company, it has incredibly high valuation expectations. To justify its stock price, it essentially has no room for error. It must continuously deliver flawless growth.
Which brings us to a final provocative thought to end this explainer. The world is undoubtedly going cashless. I mean, that is a given at this point. But the central question is, who controls the rails? Does Visa's current stock valuation accurately reflect its ability to maintain an iron grip on the future infrastructure of money movement? Because going forward, the most powerful companies won't necessarily be the ones that own the money. They'll be the ones who move it. Thanks for learning with me today, and I'll catch you on the next explainer.